All right, let's tackle a huge question for pretty much every Australian homeowner. You see those tempting ads for a super low new interest rate, you start thinking about switching your home loan, but then that little voice pops into your head and asks, what's the real cost here? Well, today, we're going to find out.
I mean, the pull is strong, isn't it? Lenders are constantly dangling these amazing deals in front of us. Lower repayments? That means more cash in your pocket every single month. And unlocking equity for that renovation you've been dreaming of? It can honestly feel like finding free money. So it's really no wonder so many people are looking into refinancing right now.
But this is the question that just stops you in your tracks, right? It's that nagging doubt that all those shiny offers might be hiding something. And that is exactly what we are going to get to the bottom of today. The true all-in cost of switching your mortgage. No more guesswork.
Okay, so our very first step is to look way beyond that flashy new interest rate they're advertising. The real answer, the one you actually need, is all about understanding the total cost of making the switch, not just the monthly saving you see on paper.
So, as a ballpark figure, you're typically looking somewhere in this range for the upfront cost. But, and this is a big but, this number is just an average. It doesn't tell the whole story about your specific loan, or your property, or, and this is the important part, the sneaky hidden fees that can change everything.
And this quote right here, it just gets to the heart of the fear, doesn't it? It's the #1 anxiety for every homeowner thinking about this. You go through all that paperwork, you pay all the fees, only to find out you're no better off than before. Well, today, we're going to give you the tools to make absolutely sure that doesn't happen to you.
So let's do it. Let's break down every single potential cost. We'll start with the fees the banks actually tell you about, and then we'll go hunting for the ones they might not be so keen to mention.
Okay, so these are the usual suspects. You've got your new lender who might charge for the application and a property valuation. Then you've got your old lender who's going to hit you with a discharge fee on your way out. And of course, there are government registration fees. But here's the thing. Some of these, especially that application fee, can often be negotiated right down to zero. So always ask.
But you know what? It's not those standard fees you really need to lose sleep over. The real danger, the real financial risk, is hiding in the fine print. This is where a fantastic deal can turn into a total nightmare, so you've got to pay super close attention.
And here they are, the biggest traps. We're talking fixed-rate break fees that can literally cost you thousands, wiping out your savings in one hit. Then there are the ongoing account fees that just slowly bleed you dry over time. Oh, and that juicy cashback offer? It might just be hiding a much higher interest rate down the line. But for a lot of people, the biggest shocker is having to pay lender's mortgage insurance all over again.
So, what exactly is LMI? Well, it's insurance that protects the bank, not you. If you have less than 20% equity in your home, you get hit with it. Now, here's the crucial point. Even if you paid it on your first loan, if your equity hasn't grown enough, your new lender will sting you for it all over again. And honestly, that can be a complete deal breaker.
Okay, so with all these potential costs flying around, how on earth do you make a smart decision? You need a tool, and that tool is called the break-even point. It's a really simple calculation that just cuts through all the noise and gives you a clear answer.
And honestly, it's a super straightforward 3-step process. Step 1, you add up every single cost to switch. Be brutally honest here. Step 2, you work out exactly what your monthly savings will be with the new lower rate. And step 3, you do some simple division to find your magic number. Theory is great and all, but let's make this real. We're going to walk through a proper example from our source material to see exactly how this one little calculation gives you a clear, definitive yes or no answer.
So, in this example, the total upfront cost comes out to $1,980. Yeah, that's a bit of a sting. But the new interest rate saves the homeowner $189 every single month. These are the only two numbers you need to find your break-even point. And when you divide those costs by the savings, you get this, 10.5 months. That's it. That's your break-even point. It means that for just under a year, your savings are basically paying for the switch. But after that, every dollar you save is pure profit, straight in your bank account. If you plan to stay in your home longer than that, it's a smart move. Simple as that. The calculation is powerful, I get it. But what does this stuff actually look like in the real world? Let's look at some stories, both the good and the bad, to see what this really means for real people. I love this slide because it tells a tale of two very different outcomes. Over here on the left, you've got Emma.
She did her break-even math, figured out she'd get her money back in just 7 months, and now she's saving thousands of dollars every year. Fantastic! But on the right, there's Sam. He just chased that low headline rate but completely missed the hidden annual fees that ended up eating almost all of his potential savings. Ouch!
And this is the ultimate cautionary tale. This person tried to refinance while they were still on a fixed rate, and the penalty was almost $5,000. That's huge. So the absolute #1 takeaway here is, if you are on a fixed rate, you have to find out the exact break cost before you do anything else. Period.
Okay, so we've seen the risks, we know what to watch out for. Now let's talk about the fun part, the rewards, and how to make sure you get them. Here is your action plan for getting the absolute best deal when you refinance.
Think of this as your checklist. First, don't be afraid to ask for fee waivers. You'd be surprised how often lenders will say yes. Second, time your switch perfectly to avoid those massive break fees. Third, look past the shiny cashback marketing and really check that long-term interest rate. And finally, consider using a good mortgage broker who can do all this heavy lifting and calculate the total loan cost across tons of different lenders for you.
And really, that's what this all boils down to. Refinancing can be an absolutely brilliant financial tool to help you get ahead. But, and it's a big but, only if you're armed with the right information. The goal is to make your mortgage work for you, not the other way around. So, the final question I'll leave you with is this. Are you in control of your loan, or is it in control of you?